Hello dear clients. The general market sentiment is very bullish on gold right now, with people looking for $2,000 plus levels on gold, and Ray Dalio's article on LinkedIn adding to the sentiment. But we want to share with you reasons why caution on gold may be good at this time. Today is 26th of July 2019. Gold is at $1418 and I am Vikram Murarka. True to its nature as a safe haven, gold has risen since May 2019 on the back of global tensions. The left axis shows the weakness in Yuan due to the US-China trade wars. The right axis shows strength in gold in the same period due to the US-China trade wars and US-Iran tensions. It is said that the Chinese central bank has also been buying gold in this period, but we would not lay too much store on that, and I will show you why in the next slide. Basically, the rise in gold since May seems to have been driven by fear rather than by value. Let me show you here the very big picture in gold since 1836. The up move from $21 to $21 in 2011 may have completed a 5-wave up move. The first wave, wave 1, coincided with World War I. We take this period of stability thereafter as wave 2. Wave 3 started with the US breaking away from the gold standard in 1971 and ended with the Soviet invasion of Afghanistan in 1979-80. Wave 4 saw gold come down from $272 in 2001, where Bank of England famously sold its gold reserves. That is why, as I said earlier, I am not very taken in by central bank actions on gold. Wave 5 saw gold rising with the global commodity boom and dollar weakness, culminating at $1921 in 2011. Now we are possibly seeing a small ABC correction where A has already happened. The current rally might be B and may end anywhere now on this moving average. A wave C, which is yet to happen, may bring the log chart down to 6.90, which would translate to $992 on gold. This now is a very important chart showing a very strong correlation between gold and crude since 1861. Regular clients know that we are very bearish on crude, targeting $33 by 2020 or 2021. Therefore, if the correlation between gold and crude continues to hold, gold too may come down towards $992. Coming to a more medium-term picture, here too we see that the up move from $1,170 in August 18 may have itself been a 5-wave up move, which might have got completed at $1,454 in July this month itself. Looking at a slightly bigger picture, we see that $1,483 is the 50% retracement of the fall from 1920.70 in October 11 to 1045.40 in December 15. Also, we have a trendline resistance right here at $1,500. So, there is a decent chance that gold may either have topped out at 1454 itself or might top out anywhere in the 1483 to 1500 region. And now comes the really interesting part. This chart shows the dramatic underperformance of gold vis-a-vis the Dow Jones, clearly showing how equities have been a better investment than gold. And this underperformance is still very much in force. The gold-Dow ratio faces an important resistance right here. If and while this holds, gold can come down. Of course, the resistance could break as well, But then we would want to buy gold only if we see clearly that the resistance has broken, not before. Not only has gold underperformed the Dow Jones, it has underperformed the Sensex as well. And it faces a crucial resistance here against the Sensex coming from 2007. So again, we cannot buy gold unless this resistance is broken. Gold also faces resistance against copper right here. In fact, the gold copper ratio, if it comes down, it might be good for equities as well, as fear goes out of the market. Gold also has a good resistance against crude out here, and in fact this is a very strong resistance, and the gold WTI ratio can come down. And lastly, gold is just coming off from a resistance right here on the MCX in India, which is one of the largest markets for gold. So not only does gold have resistances on its own charts, it does not seem to be a value buy against 5 other markets. This makes us very cautious about becoming bullish on gold at current prices. And if the resistances that we have pointed out hold, then gold could come down towards $1360 or even $1300 by December. Any positive news on the US-China trade front could be a positive trigger. On the other hand, fresh deterioration in the US-China or US-Iran situation could lead to the resistances breaking. That said, the chart suggests greater chances of positive news and gold coming down towards 1360, 1300. It may or may not rise again from the 1360, 1300 region, but if the very long-term reading is correct, there may also be chances of seeing $992 by 2020-2021. We will see how that goes. For now, these were the reasons why we think gold does not glitter at current levels. Thank you for your time. For our regular high-value research, please log on to kshitish.com/forecasts. Thank you again.